Good afternoon. It's Vijay here. Today is Sunday, 5th of January 2024, 2025. Welcome to yet another weekend edition of the Market Mirror, where we discuss what's happened last week. More than that, we discuss about important issues as to what are the issues which are affecting the market going forward, not only for the week, it could be for the next 3 weeks or maybe even 3 months. Now, last week, the market was very volatile, and in on Thursday it went up, crossed the 200 EMA as far as the Nifty is concerned, and then on Friday it gave up a lot of gains, primarily because again on Thursday the market probably had bitten off more than it could chew. So, where are we as far as the end of Friday is concerned? Now, what I observed on the weekend, for instance, is I generally look at various, people, what they talk about, whether it is fund managers, analysts, financial influencers, and what happens to the global markets and local markets as far as corporate results are concerned or corporate announcements are concerned. Now, I was very surprised, if not shocked, when in the last 48 hours I went through various YouTube videos. I spend at least 2 hours a day listening to various opinions, which primarily from the YouTube and sometimes from the what I call the blue channels, the business channels. And if you really look at what were the opinions, especially on 2025, one could sense really 90% of the opinions were creating fear, or they were afraid to enter the stock market. I'll just give you a sample of a few. Take this gentleman, Astrogan Traders. He's come up with a new video. I must give credit to him that in end September, he cautioned people about the markets getting overheated, and he was banged on. Subsequently, he has been, making videos where the end result is not that great, but still he has been reasonably okay. I followed him for quite some time for me to make some value judgment on that. Now, last week he was bullish by and large, and it turned out to be okay as far as till Thursday is concerned. If you had not taken Thursday, if you take Thursday out, then it was not that great. But still, Thursday redeemed everybody's reputation as a bull, and Friday it came down, and now he is turned tail. He says we will break 23,500 in this week. He's got a target of below 23,000. He expects a new low for the last 6 months. Of course, the yearly low, which we saw in June, he's not expecting it to break, though there are other analysts who are talking about he's saying. He's got a good number of followers, and he is, well regarded. Then we have Mr. Pierre Sundar, who's got about close to 2 million followers. He believes that markets are overhyped, and therefore he expects, things to be not that good. Basically, again, fearful kind of atmosphere. This is again, as I'm saying, over the weekend. Then we have a famous fund manager called Manish Dhangi, who is also very scared because of the significant stress in small NBFCs. He is looking at geopolitical tensions. All of that, he's basically again very, very cautious to scared, I would say. This is again this week. Then there is this gentleman, Indranil Guha, who's very articulate, who goes through fundamentals, technicals, financials, everything, and he believes that we are not close to the bottom. He starts off asking that question, and he says it's not time to buy the dip. One needs to be fearful. Then you have the recent interview in the PMS AIF world. These alternate investment fund managers are interviewed once a week, and this is the quant view of way forward from in asset. This gentleman, Anirudh Garg, the fund manager, is 100% in cash, and he believes that the safest bet today is cash. So this is again happened on Friday. And then you have what the global people talk about. People in the Global Investor Center is another popular website which talks of a 40% stock market decline because they believe that Warren Buffett is hoarding cash, therefore they can expect a 40% stock market decline in this year. Then this is another one, Liberty and Finance, again a very popular YouTuber. He talks of, he's giving a red alert. He's saying stock panic is there, weeks away. So anytime the panic will start. That gained, as far as I know, about 26,000 views as yesterday. So now it could have increased. Then Jim Rogers, one of the most famous fund managers, he says the party is over and he has just sold all his stocks. So, of course, the YouTube has got about 66,000 views, but Jim Rogers is a very influential figure, though he is not really actively managing any funds. He is part of the Soros Group, Quantum Fund. So, you have that. Then you have this gentleman, David Hunter. Now, you see how even positives are pushed as negatives. For instance, he has just done an interview yesterday with a popular this on YouTube channel called Commodity Culture, and he talks of will any assets survive. So now, if you see about this gentleman, now this gentleman has been uniformly bullish. He continues to be bullish. He's expecting actually a 25% gain in 2025 as far as the S&P is concerned. As far as the Russell 2000 is concerned, he is expecting more than a third gain. Actually, not more than third. He's expecting a 50% gain in Russell 2000, which is equivalent to our small cap and mid cap index in the US. But the person who is managing the show, he is projected it as if David Hunter is saying there will be a crash imminently. Whereas David Hunter expects a crash of 80%, but he first says the indices will go up significantly, and then everybody will get FOMO, and then only it will crash. So that is as far as David Hunter is concerned. So even if you give a bullish interview, the title is being taken, the segment where bearishness is expressed is taken and put as the headlines. Now let's look at Nifty. Where are we? If you look at the year, we are about, the Nifty has not done anything great, but it's gone up only about 9.5%. Bank Nifty has gone up 6.5%. But the mid cap and small cap have gone up much more. S&P 500, the CNX 500 has gone up about 15%. The small cap has gone up about 25%. And if you look at it where there was fear, the fear was maximum in November. Nifty bottomed out at around 23,300 levels, and subsequently it went up to 24,800. Then it has been hammered down. This is a weekly chart which I'm showing you, but still it has rebounded. Now, if you look at US markets, for instance, this is Dow Jones. Dow Jones on a daily basis has also was hammered, continues through October, November, and now it is now finding a bottom on Friday. For instance, the market has gone up significantly, Dow, Nasdaq, and S&P. So this is the Dow chart on a daily. You can see that it did not go into day before yesterday's range. Because of the day before yesterday's Dow fall, we fell quite badly on Friday. So if you go by logic, because Dow Jones and Nasdaq and basically the US market has gone up, so we should be opening up in the green. However, most analysts, this is the S&P, for instance, S&P has done very well, and Nasdaq also did. S&P has taken away 3 days of red candles, and now it is significantly up. And whereas the local guys still continue to punt and say that Monday will open in the gap. Monday we will see, Monday onwards this week we will see new lows being hit, that is below 20, the recent lows being down, when will be let's say smashed down, and then you will see the 21,000 which we saw on June 4th also being attacked as far as the prominent investors, prominent analysts are concerned. So over the weekend, what has happened? Let us look at that. HDFC banks came with updates. HDFC Bank has come up with an update. Now, if you look at year on year, it looks a good rise in advances. Gross advances also are up 3%. Deposits are up about 15%, and CASA deposits are about 4% year on year. But if you look on quarter and quarter, it is not that great. But now, whether you go to look at quarter on quarter or year on year will depend on who is stronger tomorrow, whether the bulls or the bears. So, if you look at really HDFC Bank updates, it looks like the worst is seeming to be over, and slowly and steadily they seem to be coming on to a path of high growth. They have also said that uh, this year will not be high growth, next year will be high growth. Now let's look at Indian Bank, which is a public sector bank, prominent one. Total business up about 8.3%, deposits up 7.3, gross advances 9.6, all good numbers on a year-on-year basis. Now we have to see how the market will take into it. I think these numbers are good. Take Equitas Small Finance Bank. Deposits are up on a year-on-year basis about 25%, nearly 26%. CASA is up by about close to 10%. Then you look at Union Bank of India. Incidentally, this Equitas Small Finance Bank has about 7% to microfinance. In spite of that, they have come up with a good update. Take Union Bank of India. Again, the total business global is, they've taken everything else outside India. They're not great improvement, about 5% and 3%. None of them are dropping. Then you take Bandhan Bank, which is one of the most hated bank. Incidentally, we have Bandhan Bank in our zone. Loans and advances on a year-on-year basis have gone up 15%. CASA ratio has come down because they are not able to get deposits, which are, in current account. CASA is current account saving account ratio. So they are getting deposits, but they are not, see, for instance, total deposits about 20%, but most of them are saving bank deposits and not the current account. The current account deposits will increase only when the government begins to spend and government agencies continue to keep, in current account, as well as when they give it to the the vendors. Vendors also will keep it in the current account. So CASA will improve once the government increases its spending, which it will happen in the next 3-4 months. It's already started, but it will increase. And then you have ID Bank update, that also business up 13%, deposits up 9%. Everything looks good there. And if you look at Adani Wilmar has come with that, is one of the typical FMCG. Dabur has come up with some good numbers. Update. Adani Wilmar has come up with a very good update. Now, if you look at all of this, it looks like the worst is supposed to get over. But the mood in the market is that, things are only going to get worse. So that is the, what shall I say? Here, you can say in the market that whatever the corporates are giving out numbers, people are feeling that it is only temporary and only a part of the market is doing well or part of the corporate sector is doing well. So this is where we are. Now, if I were to, look at what I would do, what if I'm fearful also, what I will look at is, okay, the market went up, it peaked out in September, came down, created panic in November, bottomed out, then tried to do a rally, people may call it a dead cat bounce, and then it is now hit back on Wednesday. And then on Thursday and Friday, this is the weekly one. Let's take the daily. So daily on Thursday it went up, and then on Friday it has been beaten down. Even if you look at what happened on Friday the beaten down is only about 50%. Now, typically, if you follow Fibonacci and that ratios, 50% retracement in a market which is buffeted by bearish, people, it is not a bad sign. So one should expect this kind of a fall when suddenly the market goes up. Especially, it has gone up significantly from the VWAP of Thursday. So therefore, that correction was expected. Now, whether it should have stopped at 40% or whether it should have 38% or at 50%, that is a moot point. One can discuss, debate, but nevertheless, it is not as bad, in my opinion, as what people make it out to be. Though the Bank Nifty has been beaten more because I think people are looking at the quarterly changes, and therefore maybe Bank Nifty could be in some sort of a pressure tomorrow. Though I personally believe that HDFC Bank had already mentioned that this year they will only just go at a snail's pace. They are looking more at deposits, and therefore they have achieved that. But then you never know how the markets take whatever they have to take, and they will probably go, in their own way. But if you are looking at whether there is bad news, for instance, HDFC Bank, somebody knew about it, so heavily it was sold on Friday. So we may see a gap down, and then we have to see further. But personally, I feel there is nothing. If data after data is coming, there is nothing wrong in the fundamentals of the economy, but there is a scare. So if you look at it, this is a bull market because it has not gone even 20%, where you can say 20% is a bear market. That is where your line in the sand is. We've only gone about 11, 12%. So for all practical purposes, it is only a correction which happened in November. So it is, for all practical purposes, we are still in a bull market, if you want a technical definition. But if you look at what people are talking of, it's as if the bear market has started and everything is going to get worse. And January will be very bad, is what people are quoting, and people are thinking, and people are acting. I would beg to differ, based purely on data and purely on past performance. And also, we've got 3 bad months: October, November, December. Generally, you don't have 4 bad months in a bull market. In a bear market, you can have. In a bull market, you don't have 4 bad months. We already had 3 bad months. So I am hopeful, and just not blindly hopeful, but purely on data. I feel things will only get better from here. However, the market is the final arbiter. Let's see what happens. But whatever you do, I hope you are successful next week and week beyond. Thank you for joining me. Have a good Sunday.